November 11th, 2023. Only once or twice a month do you get these really strong trend days in either direction. And if you bought above, 15, I thought 15 was probably going to be a minor reversal because of how strong this was. And in a way it was. I thought bulls would probably scalp. So if you bought above 15, you were pretty easily able to make your 5 points on 16. Then you get another disappointing pullback on 17, and it's essentially a micro double top. And a lot of traders are expecting it to pull back and set up another reversal. I was one of those traders who thought that was going to happen. But instead, you get a bull bar on 18. And if you think about it, 16 has a tail on it and 17 has a tail on it. So it's still a pullback. It's a micro double top pullback. And then you're trying to get a breakout above the micro double top on 18. And with the 4 straight bull bars, any of the bulls who were scalping out thinking that this was probably going to be minor are now looking at this thinking, well, there's 90% chance we break out of the 18 bar range. So, what are the odds that we go here instead of here? And if we do go here, we could potentially get at least a measure move up of that range. So that's what traders are thinking. And we did end up getting the measure move, sure enough. I think that 37 also kind of changed the day. It was a strong bull trend day already, but it was reasonable to think that, there might be some sort of sell-off or we might start to go sideways. And then 37 and 38 are extremely strong. And it makes traders wonder if we're going to get maybe a measure move up of 37, 38, or maybe a measure move up of the entire wedge to there. If you think the market can go, if it's one of those days where you think the market's going to trend all day, it's probably okay to just buy a position and hold, and go for an insanely aggressive measured move, like the whole spike up from 15 to 36 or something like that. It's probably also fine to just hold and trade always in. And if you traded always in and you bought anywhere in here, there was never really a reason to get out until the end of the day. So bar one, a big bear bar closing near its low, but bad follow through on bar two. But with how big bar one was, it was probably a reasonable swing sell looking to get back to yesterday's close and the moving average. So when you get the disappointing follow through on bar two, I think you know that a lot of traders are going to scale in above one and look to get out around break even, because it's probably a trading range day after bar one, right? When you see bar two, does that make you think big bull trend day, or does that make you think, well, it's probably going to be a trading range day? I think it signifies trading range day. Bar three, follow through for the bulls, but it's really not that big. And the tail on two is concerning. You wanted three to probably be the size of like 19 if you wanted to convince bulls we were going to rally quickly. But the reality is traders who sell below one and sold more higher are probably going to make money. And bar four, I thought bar four was interesting. It's a bear bar and it's kind of a double top with one. And you could look at it as one pullback, two. So this is 2 legs up from the sell off. Can you sell below 4? I think I'm not sure. I'll start with that. I'm not totally sure, but I think you probably can for a swing. And based on the logic that the traders who sell below here have a 60% chance of getting out at break even. However, the traders who sell below here also have a 60% chance of getting out at break even. But if you do sell below 4, what are you doing when you see 5, right? Hard to want to stay short after that. Big tail on 5 and then a big tail on 6. And if you think about it on a smaller time frame, what is this doing? It's going down on 4, up on 5, down on 5, up on 6, and then big down on 7. What does it look like to you? It's a parabolic wedge. So 7 is a parabolic wedge on a lower time frame, which is really important. And what causes the big bear bar on 7? I don't really think it's bear selling after 3 straight bear bars. It might be some bear selling after 3 straight bear bars, just knowing that this is strong enough to get a second leg, and that they know that bulls don't want to see 2 and 3 have 4, 5, and 6 as follow through. Bulls wanted to see better follow through for the bulls like they got over here. And when you get 3 straight bear bars, I think a lot of bulls will give up because their premise is invalid. If you're buying above 3, your premise is that that's basically the low of the day, and you're going to end up getting a large swing up. And once you see 4, 5, and 6, do you really think your premise is valid? And if it is valid, you're going to have a lot of other chances to enter. So a lot of traders will just give up and flatten at the market, and that's what's causing 7. 8's an inside bear bar, but it doesn't close that strong. It's more of a doji. And it's right on the moving average, so it's maybe not as great of a sell. I'm trying to get a breakout below the wedge if you sell below 8. 9, an outside bar. So we have inside bar, outside bar. And then we have a good bull bar on 10 closing near its high, but there's a big problem with it. And that is that stop order bulls haven't made any reasonable amount of money yet today. If you bought above 2, you couldn't even make a 5-point scalp and you were risking almost 10 points. Does it make sense to buy above 2 to make less than a 5-point scalp if you're risking 10 points? No, it doesn't make any sense at all. So stop order bulls didn't make any money here. They haven't made any money over here. But limit order bulls who bought below 1 were able to make a full 10 points. And bears, stop order bears are making money. Limit order bears are making money. However, everyone except for stop order bulls is making money. And when you see bar 10, it's another opportunity for stop order bulls to make money. However, after this, it makes me think we might get another leg down. And I'm just not all that confident that the bulls are going to start making money right now. I think what's more likely is that we're going to continue sideways. And if stop order bulls do make money here, it'll probably only be a scalp. And if it's not a scalp, if we got just massive follow through like 19, then you can just buy 19, but that's really rare. So it doesn't really make that much sense to buy above 10, I don't think. It's just a low probability trade. On the other hand, then you get 11 and limit order bears, stop order bears all making money. Stop order bulls still can't make money. And if stop order bulls haven't been making money, is this what they wanted to see? What do you think you're going to do as a bull if you took a chance buying above this, hoping that we were going to rally strongly, and then you see bar 11 as your follow through? What are you most likely going to do? You're going to exit below 11, and a lot of traders do that. They exit below 11, and that's why you get big follow through on bar 12. Additionally, think about it. It was a wedge, right? So this was a parabolic wedge, and a lot of times when you break out below a parabolic wedge, break out below a wedge, you get a measure move down. It's like a 40% chance of a measure move down. And if you're selling below 11, you're risking about 5 points to make more than 10 points. So with a 40% chance, and it might even be a little higher than 40. I'm using 40, but it might be a little bit better than 40. But even if it is 40, your equation is good. So I think it's a good sell below 11. You can get follow through on 12 and 13, but you can see 12 had a disappointing tail, right? It reminds you that even though, stop order bulls haven't made money yet today, they're probably going to pretty soon because 2 and 3 are pretty strong. And they're strong enough that, I would expect traders who bought this close have a 60% chance of getting out of break even. And bar 10's it's not, the context for the bar isn't great, but it's a good bar. So it's probably gonna get another leg up. So with stop order bulls, stop order bulls bulls in general aren't doing the best, but this doesn't look like a big bear trend day. This looks like a trading range day right now. And so disappointing tail on 12 and then 13, another tail. So traders who bought below, they were probably not quite able to scale in lower. Not quite, but traders, this tail is a lot of overlap with 11 and 12, and it's disappointing. And then you get a doji bar on 14. And when you get a doji bar, when you're trying to get some sort of sell to close trend and you get a doji bar, it means that the trend is probably it's going to at least pull back. And so a lot of traders, and this isn't all that great to begin with, right? If you're selling below 11, it's a lower probability trade. And on those lower probability trades, you want to see good follow through. And 12 isn't necessarily bad follow through, but just the tail is disappointing. And when you get kind of a disappointing tail and then a disappointing tail and then a doji bar, that's a lot of disappointment. And it makes me think that traders are probably going to exit pretty quickly if we get a bull bar. Because traders are going to exit quickly if you get a bull bar, 15 might be a reasonable buy for a scalp. It could be, big spike here and then 1 pullback, 2 pullback, 3. So a wedge pullback, essentially trying to test the bottom of the spike. And so you could look at it as buying at the bottom of a trading range. I think 15 is probably an okay buy. It's just stop order bulls haven't made money yet today. So I don't really have a desire to be the first stop order bull to make money. Somebody else can do that. So bears are exiting above 15. I think that's causing the rally up on 16. And like I mentioned, bulls end up scalping out because it's probably a minor reversal. And anyone who doesn't scalp out on 16 is disappointed in the big tail on 16, makes them think it's probably a minor reversal. And then minor reversal meaning, 10 bars or 2 legs. But really what I was expecting was, 1 leg and then a pullback and then potentially a major reversal because that broke the trend line. And it's early in the day, so you should be looking for a major reversal. So I thought 18 might be a bear. When I could see 17, I thought 18 might be a bear bar. And then if I was hoping 18 would be a bear bar, and then we would get a good bull bar that I could buy above for a swing. However, a lot of traders were also looking for that same thing. And when a lot of traders are looking for something, a lot of times it doesn't happen. What ends up happening is traders are so eager to get long they'll start buying because they know if it drops below, then it's probably going to get bought up, and they know that they're going to be able to scale in lower and make money. And so when a lot of traders end up buying, you get a bar like 18. And any of the bulls who scalped out now realize this is just a pullback. This is the pullback they were looking for, but it doesn't look the way they wanted it to look. But 18 is forcing them to have to rebuy their longs because 90% chance we break out of the 18 bar range after 4 straight bull bars. It's pretty likely we're going to at least get another leg up. So okay to take the buy above 18. And even just if your profit target is the top of the 18 bar range, you're getting 2-to-1, right? And you're getting a little better than 2-to-1, and there's probably at least a 50% chance you're getting there. So that's why you get such a big bull bar on 19, because the edge was clear and it wasn't very. It was a higher probability trade with good risk reward. So usually that stuff, the edge disappears quickly, as it did on 19 and 20 and 21. So now you have 1, 2, 3, 4, 5, 6, 7 straight bull bars. And if you're long for any reason anywhere, you should be thinking about a measured move. And it's okay to buy the close of 20 and 21. It's totally fine to do. Just know you're probably going to have to sit through a pullback. It's not the end of the world, but you just know you're probably going to need to sit through a pullback. And if you're buying these higher up closes, you need to realize your premise is that we're always in long and we're going to get another leg up. So if you're buying these closes late in bull trends, your premise is that we're always in long and we're going to get another leg up. You need to be, or it's still early in the trend. It's still the spike phase. So we're probably going to get a channel before we get the trading range. But I think the point I was just trying to make is that the second leg, while we should get a second leg up, there could be a deep pullback. So mainly focus on your premise is that we're always in long and we're in the spike phase and we're going to get a channel. While it's still true that we should get a second leg up, if that's your premise, you probably have to be willing to scale in, which can be obviously difficult to do. And some traders, what they'll do is they'll buy the close of 21. They see 22. They're disappointed in 22. They know we're probably going to pull back. And so during 23, they scalp out around break even. And that's what's happening on 23 when we get disappointment on 22. 24, another doji bar. I think after 3 straight doji, some bulls will sell, kind of similar to this. It's a less extreme version of this, obviously, because this is so strong that bulls know we're probably going to continue up. So, but some bulls who wanted immediate follow through and will just wait for the pullback after 3 straight doji bars, they're exiting, and that's causing 25. But you don't need to exit below 25. Make bears prove it, make them prove they're in control. You have an 8-bar bull spike and then a tight trading range. Do you think this one bear bar is going to break out of the 8-bar bull spike and then the tight trading range? Do you think this is going to be successful on 25? Probably not. And if it is successful, 26, there'll be a bear bar, and you can just exit below that bear bar. It's not, you can just exit a bit lower on the off chance that happens. But the most likely scenario is that we're going to continue up, and you should want to see how that looks. So obviously we get bad follow through for the bears who sold below 25 on 26, and then a good bull bar on 27. Some bulls might have been willing to buy above 27, but doesn't trigger on 28. I think a lot of bulls might exit below 28. It's a double top, and while this is still pretty strong, we could get a pretty deep pullback. So the only bulls who aren't going to exit below 28, I think a lot of always in bulls will exit below 28, but I think the bulls who are have really wide stops and are ready and willing to scale in, some of those bulls will stay long and expect this breakout to fail. But what ends up happening is traders know that it's probably the traders will probably exit below here. So what they'll do is they'll buy basically another position on the close of 28, and they'll be risking 1 tick. And even if you're just trying to get back up to the 27 high, it's not very high probability, but you're risking 1 tick to make a couple points. So obviously your risk reward is pretty good. And a lot of traders, they'll buy that close and then they see 29 and they'll think, well, this is a wedge pullback and it's pretty sideways. And we had this, so it makes me think we're going to get another leg up. So they'll stay long, they'll hold long. And that's why we don't get really bad follow through on 30. You are buying the top of a tight trading range if you're buying 29, but there's enough of a chance of a second leg up that I think it's worth it. 31, another good bull bar. And additionally, it's always in long, right? You're buying a wedge pullback when it's always in long. That's a good idea. And there's an open body gap still. So there's a gap on the line charts. 31, a good follow through for the bulls and more follow through on 32. So we have another spike. And you can see it does something important. When we have the 22 high, the 32 low does not overlap the 22 high. So there's a big open gap. And then you get 33 bear bar. What bears want to do is allow limit order bears to make money, right? Limit order bears they're still some still made money here, but not that many. And they're trying to allow limit order bears to make money, and bulls know that. So bulls are buying the close of 33, trying not to let it get back to the 22 high. So the question everyone's asking when we get this breakout is, are we going to get back to the 22 high? And if we don't get back to the 22 high, there's a reasonable chance this could go all day. 34 inside bar basically trades back to the 32 close. And find some sellers there during 35 because some traders bought the close, disappointed, and they'll be exiting. And then you get 36. Probably most bulls won't exit below 36, but this is becoming disappointing for the bulls, and it's making traders start to think this might start to go a bit more sideways. You still have a strong spike, and this is the channel phase, but generally it's spike, channel, and then trading range. There's only a 25% chance that you're going to get a strong breakout above that channel, and that's exactly what happened on 37. 37 is a really surprising bar. By the way, something else to mention, if this did pull back, it's possible that you get another leg up later in the day. It's not exactly a one pullback two type of day. Those usually end up a bit different, but I think it was possible that if you started to go sideways here, you have to be open to a reversal, but I do think it was reasonably possible you get another leg up later in the day. 37, big bull bar closing near its high, big follow through on 38 for the bulls. And these are really good bars. And it makes traders wonder, well, is this part of that 25% where we're getting that big breakout above the channel and they're going to look for a measured move up? 39, bad follow through for the bulls, but not the worst thing. After 37 and 38, you get a pause in the buying on 39. That's kind of expected. An inside bar on 40. Some traders were hoping to sell below it, thinking it was going to be a trap, but that's pretty unlikely after how strong this is and how strong this whole thing has been. It's a low probability trade. Some would sell just hoping that limit order bears can make money, but again, not all that likely. Big bull bar on 41, and then more disappointment on 42. And there's some traders have a really good profit and they'll just kind of start to exit, and that's what's causing 44. But you definitely don't have to exit as always in bull. And I think there's a couple reasons. One being, this trend line is really strong, and we're probably not going to break the trend line. And if we do get back down lower, we're probably going to get bought up again because this is a breakout on a higher time frame, and you're probably going to get another leg up. But that's not the actually important reason that I think you don't have to exit in here. And if you've been listening to me for I guess not a while, because I've only been doing this 6 months, but I'm 18 minutes into this video, so there's a couple of people who usually regularly watch, and I would challenge those people to try and think about the things that you think I'm going to say before I say them, because it'll get you used to, just thinking about it. Before you put on the review, look through the day and mark up the chart by yourself, and put things that you thought were important, and that'll be a good way to help you learn how to get better. But the really important thing I thought was that, when was the last time we traded below another bar? It was right here. So we have a 17 bull bar micro channel. If we have a 17 bar micro channel, do you think bears are going to be eager to sell the first bar below? Probably not, especially with how strong this has been. I don't think bears are going to be very eager to sell. Some bulls might start to exit. You can see bears didn't sell, and then some bulls start to exit because they think there might be some, couple legs down. But the bulls that are exiting, causing this, and definitely any bulls who are exiting below here, are buying back their longs above 47. They're buying back longs above, the breakout. On these types of days, it's okay to just buy the breakouts above the tops of breakout points, because they're just so strong and relentless. So even though 44 is a decent bear bar, it's probably just a two-legged pullback. And with how strong this micro channel is, you should think we're getting back to at least the 41 close. 46 inside bar, high 2 on the trend line. It's a reasonable buy. These are the buys that are probably have a 40% chance of getting a swing up to here. And if you're taking that trade, you're risking 3.5 points, and you're trying to make 13. So you're getting 4-1 at a 40% probability. And because you're getting 41 at a 40% probability, the math is really good. And when the math is really good, a lot of times what happens, right? When the math is really good, what happens? When the math is really good, what happens? So that's what's happening on 47 is the bulls are buying, and it was a 40% trade, but then you get this, and all of a sudden maybe it's 50, 55%, and then traders will buy the breakout hoping to have a 60% chance of making 1-to-1. And that's how that's how the math works, 40%, maybe 50%, and then you get the breakout and it's 60 and you're getting 1-to-1, but you still have a better probability. So that's how that works in bull trends. 48, we got, we traded above the high. We ended up finding a little bit of selling pressure, but ultimately it was probably just profit taking at the new high. I don't think bears are selling there, or some bears will, obviously, because they're algorithms and they'll sell every new high. But we've had a lot of open gaps, so for the individual trader, not a great idea. And we do end up getting more or less another open gap here, as you can see. 50, another bull bar. So we're still in a bull, strong bull channel. We're trying to basically restart the spike phase. We had spike, channel, and there should have been a trading range, but then we got another breakout. I would argue the breakout was just 37, and then because you got the spike, and then you had the channel. And generally the bottoms of channels get tested and the stop is okay below the bottom of the channel. So a lot of bulls will have their stop below, because you have the spike here, and a lot of bulls will have their stop below 38 at the bottom of the channel, thinking if this is a bull trend day, we probably shouldn't fall, or maybe there'll be a point or two below 38 level. Thinking if this is a bull trend day, we're probably not going to fall far below here. And they don't even let it fall below. They defend that low at the bottom of the channel. So spike, bad follow through 52. But again, with how strong this has been, any reversal down is probably going to be minor. Bad follow through, you get 53. At this point, it's okay to hold a position long, as always in. But I think if you're long, you should just be waiting for like a good bear bar or a couple good bear bars to exit below. Note that we didn't trade below the moving average. Basically, since bar 17 was the last time we really touched it. I think we touched it at 70, but we haven't had a close below the moving average since bar 15, which is like 70 bars. So on Monday, if we get like a gap down, it's essentially a gap bar. And so you should be looking to buy to get back to a new high. So I'm hoping on Monday we'll open up somewhere down here. And there'll be a reasonable scalp to a new high, but we'll see. But we ended up essentially just going sideways, and then we get another breakout attempt on 70. So we got, spike, pullback, channel, trading range, and then another breakout attempt on 70. And then just basically, tight channel into the close. Like I said, on these kind of days, if you you just held technically always in, there wasn't really a reason to exit, and you would just be exiting late in the day, and you'd make a pretty huge profit. 50, if you took the swing trade, probably make 50 plus points. And, a lot of those traders will buy here and they'll keep adding on as you go higher. Brad says that Al says one of his goals is to someday just buy every single bull close, giant bull trend day like this. It's always an interesting goal to have because it's logical too. It makes sense because once you start to get the follow through and you're trading always in, you get a breakout, you can buy the breakout, and put your stop below here, and then your risk is a lot smaller, so you can keep adding to the position. And that's what a lot of traders will do. On the daily chart, we're obviously pretty overbought. We're trying to get a breakout above the wedge. Trying to get a breakout above the wedge and like some sort of swing up, essentially like that. I don't think we're going to go straight up there. I think that the bears who sell above this have a pretty reasonable chance of making money selling above that day. And I think that for the most part, we're probably going to get bad follow through tomorrow. On the weekly chart, bulls ended up getting better follow through than I thought they would, but still, if you bought above this bar, this is still kind of disappointing. You wanted bigger, better follow through, but this bar means there's a good chance that we're going to get even more follow through tomorrow. Or next week. It increases the chances for the bulls. However, this is a pretty tight channel, so I'm expecting another leg down. And something else I thought was interesting, I'm done with the Emini review, but I just wanted to go over something on a stock, not Bitcoin. Al calls these HODL, like HODL trades, hold on for dear life. And his thought process is he has the stats somewhere in here. I'll pull up in the bankruptcy chapter of his encyclopedia, if you have the encyclopedia. If you go into the bankruptcy chapter, he gives like basically stats on like certain stocks for these hold on for dear life kind of trades. Let's see if I can find them. Hold on a second. So once a stock falls below $5 and 90% from the high and more than 40% in a day, there's a 50 to 90% chance of bankruptcy, which I think is really interesting. This stock hasn't fallen below $5, but it's definitely fallen 90% from the high. But he takes these kind of trades. Like I don't know if he's has anything to do with this, but this is just something that I was looking at. It's like an automotive company that's relatively new and definitely could go out of business. But I'm trying to probably buy it a little lower. You can see this is pretty strong. I thought this is strong enough for a second leg up. So the traders who bought this close should get out at break even. And I kind of think that this is a spike and this is a pullback and this might be the top of the channel. But I know at least this is a reasonable top of the trading range magnet. But my point being, even if this stock goes bankrupt half the time, which I don't think is likely, I think it would be less than that. But even if it goes bankrupt half the time, the other half of the time, if you can get it, I'm hoping to get it around closer to $13 or $12. Maybe I'll just buy below this low last week. You still have a reasonable enough chance of making 3 or 4 times your risk. So, it's probably going to just go into a trading range because of how strong this is. But I'm hoping that it's at least going to bounce to somewhere up here. This is again, just don't go buy this stock on my behalf, please. But I don't know. I just thought I just kind of think this is one of those types of trades that he talks about with the hold on for dear life kind of things. Anyways, that's the day.